You've probably heard of the opening range breakout, otherwise known as the ORB strategy. But what if I told you that traders are using it completely wrong and that's why they're losing? In the next few minutes, I'm going to break down the strategy for you and explain how I've only had a total of 6 losing days in 2025. It is right now July 7th. In fact, what I'm going to show you is today's live trade where I made $15,000. So let's dive into the setup. All you're essentially doing is waiting for the 15-minute opening range to form. Now, what we want to do is be patient here and wait for a 5-minute candle to close outside of the range, just like you're seeing right here with this candle. See this down candle closes outside the range. That gives us our temporary daily bias, in this case, to the downside. So this means we are looking for shorts. Now you can see I entered the short right as that candle body closes outside of the range. But what a lot of people will tell you is to wait for some sort of pullback into a fair value gap or a discounted area or use a Fibonacci retracement. And this just adds a ton of confusion. This led us to create the TMT Crazy Horse Bands indicator. This is a custom indicator. I'll turn it off and on. You see it with 3 bands. What this is doing is highlighting areas within price. So we created a formula that would allow us to responsibly add to our initial position size only if it met certain criteria on a checklist. And by the way, I put together a full roadmap with this training for free. All you have to do is comment the word ORB and I will DM you the link to join absolutely for free. So let's get back to it. How do we come up with our stop loss distance and our take profit? Well, the easy answer is we want our stop loss to be dynamic based on the volume within our visible range. If I just make sure the chart in TradingView is on auto and then I tap the short tool over here and pop it on, you can see this gives me a distance of 34, and this is the auto distance based on the volume within my visible range. Now, the real edge to pretty much any system, but especially this one, is understanding whether or not you have an A setup, a B setup, or a C setup, because you're going to adjust your risk dynamically based on the quality of the setup. Once you prove that you have an edge by grading your setups, you can truly lean in and start scaling your account. Most traders just tread water or they continue to lose because they never figure that out. Price closes above the center line, we add. Closes in the top band, we add. Now today was a B setup, so we're not going to go full size. We're going to go lighter sizing. And with C setups, we may not even trade. So my break even for this trade is roughly here. And I ended up exiting the trade right around here. But how do you know where to take your profit? Well, today was a news drop based off of a tweet. So we took our profit because it slammed down fast and we were way up. But most of the time we will trail price using what's called the shelf method. Those days are absolutely huge. So because this has around a 70% win rate, those days are huge. So because this has a 70%-ish win rate, our profit factor is through the roof. There's more to it. The strategy is awesome. If you want to learn, comment the word ORB and I'll send you the link to join for absolutely free.